Today, we're going to take 8 different charts to help decode what's going on in the real estate environment, what you might expect moving forward, and how all of that impacts the stock markets. Let's jump into that right now.
Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a bi-weekly show that aims to focus on the trend lines rather than the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Welcome again back to the Trending Report. Today we are going to be diving into 8 different charts that will help you decode what's going on in the real estate environment and how that kind of relates to the overall economic situation that we're dealing with these days, as well as how that's impacting the stock markets and what's going on in the various categories that we track for you each and every Trending Report. We're going to be reviewing data that is as of last Friday. That would be August 25th. And let's jump right in. So here we go. We're going to start off from a supply and demand perspective as it relates to what's going on in the real estate environment overall. Over here in the upper left, we're looking at building permits. Each one of these charts is going back for 20 years so that you can kind of compare what's going on in each one of these perspectives. So think of these as like different lenses to look into the real estate environment as to kind of how they're all interconnected and how they're impacting each other. So when we're up here in the upper left, again, looking at building permits, as you can imagine, coming back into the financial crisis here prior to 2008, we saw a huge decline in building permits. And then we've seen a large run up in these building permits taking place ever since then. But most importantly for what's going on right now, you'll notice that we're getting a strong dip taking place right here with the building permits. So the building permits are in fact kind of drying up to a certain degree as the Fed has been increasing interest rates. Now, total housing inventory, this is all the houses that are for sale at any given point in time. That's what we're looking at here in the lower left. Now, in this instance, there is a cyclical effect. You can kind of see how things bounce up and down on a pretty regular basis, especially like look at this through here, this kind of laddering effect that you're seeing. But if you look at the bigger picture, going from literally from 2008 through now, we are seeing a continued decline on the housing inventory. So that numeric has been in kind of a steady decline, even though we just came through this upturn, and now we're seeing a bit of a downturn taking place. So when you're living in it in the more myopic standpoint, it feels like ups and downs, but overall it has been trending south a bit. Now, new home sales up here in the upper right. New home sales, as you can imagine, links right back over here to these building permits, and we're seeing a big drop in the 2008 era, and then we're seeing the increase just as we did over on the building permits, and then again we see the peak. The peak hit a little earlier over here, but we see the peak and then the decline that's been taking place here. So new home sales have been starting to cool off a bit, and we'll get into some pricing on the next slide. But obviously those things are all related. Now that's new home sales. Here's existing home sales down here on the bottom. So existing home sales, similar, but always a little bit different. We're seeing, again, the decline here. We're seeing a general climb here, but we're seeing a much more rapid decline right in here. Because, again, these are homeowners making these decisions. A homeowner who's a current owner versus a homeowner who's a buyer. Where up here, you're talking about, up on the top, you're talking about new homes, and that has to do with construction and some of the other things that are impacting that. So those items happened further in the past, and you can't really stop them midstream. Whereas someone can literally make a decision over a weekend on an existing home if they wish to buy or sell. Now, if we look in at what I'll call price and finance, again, we're looking at 20-year charts, and think back to what we just talked about, and now let's overlay kind of the price and finance situation to this. So here we are in the upper left. We've got the new home average sale prices. So average sale prices, for the most part, has always been trending up, and you would kind of imagine that. You'll see little periods of decline. Here we are during the old financial crisis, and then here's the big run up from the pandemic. But now again, we're seeing a bit of a peak, and we are seeing some pullback. So there is a settling that's been taking place with the home prices. Now, if we look at the 30-year mortgage rates, as you could probably imagine, that has a lot to do with it. The Federal Reserve has been increasing interest rates, and that directly impacts mortgage rates and has been jacking those mortgage rates up as well. So again, we've been in a general decline for quite some period of time, and we really bottomed out here in the early 20s. So 21, 22. And now we've got this huge spike up, and immediately we're at just north of 7%. I believe the current 30-year average rate is approximately 7.3%. And again, if you can imagine a dotted line coming across here, we've actually hit beyond the high for the last 20 years. Now, again, if you go further back, you will find some higher interest rates. But right now, for the last 20 years, we are at an all-time high. Now, if we look at mortgage originations, so this is the mortgage rate, this is the number, if you will, of people going out trying to originate new mortgages. We've seen kind of a decline taking place in here, which is a bit surprising, but then we get this jump up. I would have guessed, I only say it's a bit surprising because I would have not necessarily guessed that this was a general downturn in this era. But this, we all would have guessed. This is the big jump up going from the pandemic. And now the big kind of everybody putting the brakes on that's been taking place here as of late. So mortgage originations are pulling back. And that's a little bit of a combination of a couple of different things. Number one, the interest rates, as you might expect. But also, I don't know if you keep track of real estate that much, but a lot of homes, especially at some of the lower price points, they have all been buying and selling above list price in many parts of the country. And they've been buying and selling without financing. Now, people might pay cash and then go finance it later, but there's been such a hot market that people don't want to wait. When somebody shows up with cash in hand, they're winning the bidding process. And so I would imagine that has an impact in this as well. Now, if we come down here, however, now we're looking at refinancing. So here you're seeing a much more kind of bouncing line throughout time. But when we hit those really low interest rates, so this right in here, over here on the left, if we look at the lowest interest rates and we bring that over here, what you'll see is that was firing up a large number of refinances. And now that interest rates are getting higher, those refinances are sliding down very fast. In fact, once again, if you can imagine a dotted line or a dashed line coming across the bottom here, you'll see that those refinance numbers are at the lowest they've been in over 20 years. So definitely is having an impact. Now, we know the Federal Reserve continues to weigh in on this. We know that they're determining the amount of interest rate increases that might still be left in the barrel, so to speak. But the markets are continuing to kind of plod along. It's been volatile. We're going to check into what that really means right now, but we are anticipating future interest rate increases. Now let's take a look at what's going on in the stock markets as it relates to all this. So here we're looking at capitalization. So large cap down to small caps, and we're taking the total stock market here in the middle. The couple of things that really jump out to you here is all of the classes, all of the capitalization classes from large cap to small cap. They're all flashing bullish on the trend. That's the longer year period of time. However, on the swing, which is the shorter year period of time, they're all flashing bearish. So we are seeing a turn that's taking place here. And this relates down here to the trend, and this relates over here to the swing. So as you can see, the trend kicked in right around in here, and it has been on an upward trend since. However, right here into August, we did see the swing turn, which is being represented here. Now, again, these are the levels of resistance, so it's hard for the market to get past that. And we saw this last level of resistance hit right here, and then the downturn. We do have some support lines here, and we're starting to bump right up against that support line now. So it's going to be interesting to see what happens in the next couple of weeks with the market. Is it going to fall below that support line, or is it going to turn back the other direction and kind of stay within that channel? Now, if we look at sectors, in the sectors, we have 11 different sectors that make up the S&P 500. This is an equal weighting of all of them, but those ranking above it are kind of lifting the market up. Those ranking below it are kind of pulling the market down. So here we've got information, energy, telecom up at the top of the list here. Now, here you'll also notice we do have two, that's real estate and utilities, that are showing bearish on both the trend and the swing. Everything else kind of lines up with what we just looked at capitalization, in terms of there are much more showing bullish on the trend, but literally all of them are showing bearish on the swing. So again, we can connect these right down to the graphics, and we see the trend line for quite some time working its way up, but now the swing is coming down right in here. So again, very similar, just two different ways to look at the markets, whether we're looking at it through the sectors or whether we're looking at it through large cap, small cap type lens. And then here we're going to get into international. It's still somewhat similar to what's been going on in the U.S. Now we are seeing some of the growth down here showing both red, but for the most part, again, we're getting all bullish on the trend. We're still seeing all bearish on the swing. Now, the angle, the pitch, if you will, of the growth over time is not quite what the U.S. has enjoyed. So we're seeing this resistance right here, this red, and we're seeing the support beneath it. And we've got kind of a channel going on right through here, and it continues to bounce through that channel. So even though from a trend standpoint, we start way down here with an upward trend, we are seeing the change right here, just like we're seeing in the U.S. with that current swing heading to a bearish level. And then finally, we look at the bonds. In the bonds, we're seeing almost a full agreement, I guess is the best way to say it, in both the trend and the swing coming in at a bearish level. So we see the trend turning bearish over here, right around in this range, right in here, it turned bearish. And now we're seeing the most recent swing turning bearish right here. And you can just tell from the resistance lines and the support lines, the channel that's being created here in the bond market. And that's the overall bonds. Now, those that are lifting it up tend to be the corporates here at the top. Those that are pulling it down tend to be the long-term treasuries here at the bottom. So lots going on in the market. It will be interesting to see if on the previous three charts, I'll just bounce back real quickly, if the swings, which are all showing bearish on all three of these, if these swings will get enough horsepower behind them to actually turn the trends bearish. So in the equities market, that's the battle that's taking place, and we will be keeping track of that for you as we move forward. Thanks again.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.